right, welcome to Talking Investing. I'm Tom, and as always, this is not financial advice. Today, I want to do a video on Coinbase Global, stock ticker COIN. This is something a little bit different. This is a video I made 1 week ago. This was a members-only video, and I talked to the members, and they wanted to share this with everybody else. So, if you're new to the channel, please remember to subscribe and hit the notification bell. Also, if everybody could please smash the like button, I appreciate it. Lastly, if you want to join the channel and become a member, you can hit the join button on the YouTube page. If you don't see a join button, there should be a link below. And again, members get videos like the one you're about to watch. So there's additional members-only content. Also, we do a once-a-week members-only live stream, and the members get to pick one video a week for me to do a deep dive on. So we'd love to have you join us as a member, but in any case, here is the video on Coinbase, and I'm just going to show you guys the video just as it played to members last week. The only thing I want to do is take a look at where Coinbase is right now, because Coinbase is currently retesting its lows. So as you go through the charts on this one at the end, bear in mind, we talk about their lows. Well, they're retesting them again today. Coinbase is at $41.30. That leaves it at a $10 billion market cap, so just bear that in mind. Okay, I hope everybody enjoys the video. All right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. This is a members-only video. I want to do a video on Coinbase, stock ticker COIN. This is the video that you guys selected 2 weeks ago on our members-only live stream. So I know this took me a while to get out, but I have done an unbelievable amount of research on this one. This is a company that I've known about and I've kept my eye on, but doing a deep dive on this one was a lot more extensive than I realized. So hopefully I've come up with some stuff that is of use to you guys. I'm going to try to summarize a few of the things that I think are most important part of Coinbase's business, what makes them different from some of the other businesses in their industry. And then I'm going to give you my thoughts on where I think this company is going and where I think this stock is going. You guys picked this Coinbase stock before the entire crypto exchange universe basically got turned upside down on its head. The FTX situation has had massive short-term ramifications, and I think it's going to have very long-term ramifications. So I'm going to kind of give you a hint right now. I actually believe that in the long run, what's happening right now is going to be of benefit to Coinbase. I think they are going to come out of this as one of the winners of what's going on here. And I'm going to show you some of the reasons why I think that. Having said that, I do think the deeper I dug into this stock, the more I was on the fence, even from my own perspective, as to what their future looks like. We're going to take a look at their financial performance. It has been very bad in the year 2022. 2021 was like the best year ever for crypto and crypto exchanges, and their revenue is way down. They went from making boatloads of money to losing money. But I am going to show you that I think they're losing a lot less money than it looks like. The top line numbers can be a little bit misleading, so we'll dig into that as well. Let me show you the areas of this company that I think are important to understand. And again, this is going to be a pretty top level review because there is just so much overwhelming amount of information related to this company that I could do a series of videos on this and never really get to the end of it. But I'm going to try and do my best. What I think is important, what I think stands out, and what I think matters for the future of this company. Okay, so just right off the bat, we'll start as always. Coinbase closed on Friday at $57.46. So I'm doing this video before the market opens on Monday, so we'll see what happens on Monday, but I'm not necessarily so worried about any given day. We will look at the charts. You can see Friday was a great day for them, up 12.8%, but that is part of a roller coaster ride they've been on, all of which is a function and a byproduct of the FTX situation. But if we look in total right now, they have a $15 billion market cap. So if we look at the history of Coinbase, and it's not a very long history, these guys just went public. So in April of 2021, they went public. They were a $70 billion company. So by November of 2021, despite the fact that Bitcoin hit its all-time high in that month, Coinbase was actually down a little bit from its initial IPO. It was now a $60 billion company, but that's still very significant. You'll see, much like all the cryptocurrencies, Coinbase has taken a gigantic slide down in the months that followed. Really, the year now that has followed the highs of last November, all of the small cap high growth stocks have been beaten up badly, and Coinbase is no exception. So you're going to see they've gone from a $60 billion company, even back in August of this year, which is now about 3.5 months ago, this was a $20 billion company. So again, where we are right now is at $15 billion. So it's not at its all-time low. It's at $57. $40.83 is its 52-week low. So it is a little bit off of its lows. And I do think it's going to be on the rise, although obviously with this super volatile situation that's going on with FTX, this is going to be a bumpy ride for the next couple of weeks anyway, if not longer. Okay, so I just want to talk about the headline here a little bit on this article. This was on November 10th. So this is from the CEO of Coinbase. Quote, "This is an opportunity for the United States to really be the one to put out some more of this clear regulation," Coinbase CEO says after FTX downfall. So the downfall of FTX is not the first cryptocurrency exchange that has gone under. However, it is by far the biggest. So FTX, I believe, was the third biggest exchange. I think Binance is the biggest exchange in the world. Coinbase, I believe, is the second biggest exchange. And then FTX was the third biggest. And now effectively they're filing for bankruptcy. So they're not necessarily gone, but obviously they're extremely wounded. But you can see right here, the interesting part is you're going to see the CEO of Coinbase actually calling for regulations. And that is because this company is already a publicly traded company. They are already in compliance, essentially. So regulations to them is going to mean very, very little. Regulations to the industry, I believe, is going to be everything. So I think we're at a point now, particularly with this FTX situation, where until we get some solid regulations on two things, and I've been saying this for the last 6 or 8 months on the channel, we need regulations immediately on stablecoins and on exchanges. If we can get clear regulations on those two things, that will stabilize the crypto universe. And then as it pertains to each individual token or coin, more regulations will follow, of course, over time, but those will be much less significant and they'll have much less of an effect on Coinbase. What Coinbase is waiting for is the thing that I really have said is going to come first, which is regulations on these exchanges. And like I said, Coinbase is already a publicly traded company, so most likely they are already in compliance with any regulations that may be coming down from above. From a disclosure standpoint, the uncertainty of a lack of regulations is keeping a lot of institutional money out of this industry, which is holding back cryptocurrency in general. And effectively, Coinbase's number one source of revenue is revenue that they get on fees they charge on trades of cryptocurrency. So in order for them to get where they need to go, activity on cryptocurrency needs to increase. It's at historic lows here in 2022 as the year rounds out versus historic highs, as 2021 was rounding out. And that is why they've gone from making significant money to losing money. But when we look at their financials, I think you're going to see they have a cash runway and they have a business model that's set up. They have an awfully long time to turn the corner, if you will. And they were just making a lot of money last year. So the cryptocurrency universe is extremely volatile. So I think this is going to be a part of the situation. Some years are going to be better than others. As we move into crypto bear markets, we're going to start to see years like this. And Coinbase obviously is very early on in their process, and I think they've got a lot of maturing to do as a company, but they're going through that right now. All right, so Coinbase put out their Q3 earnings, which was the period ended 9/30/2022. For the first 3 and 9 months ended September 30th, 2022, our total revenue was $576 million and $2.5 billion, respectively, including $365 million and $2 billion in transaction revenue. So you can see this is what I'm talking about. The transaction revenue, their trading fees, this is where the vast majority of their revenue comes from. They are diversifying their revenue. They've made some big partnerships that we'll talk about. So I do think they will continue to grow, but this is the backbone of their business. Okay, subscription and service revenue was $210 million and $509 million for the 3 months and 9 months ended September 30th, respectively. For the 3 and 9 months ended September 30th, 2022, our net loss was $544.6 million. So that was for the third quarter. So it would appear that they lost $500 million in the third quarter. And then for the year, they are at $2.1 billion of loss. However, they then go on to say adjusted EBITDA was $115 million loss versus the $544 million and $247 million loss versus the $2.1 billion for 9 months. So you can see from an EBITDA standpoint, the performance of this company is not as bad as it looks. With the cash that they have on their balance sheet, I think they have $5 billion of their own cash, free and clear, unencumbered. They have a very long cash runway. As fast as this swung one way to the other, at some point, I think it will probably swing back. The question is, can they withstand the period in the middle? And with $5 billion of cash, I believe that they can. Okay, so this is a breakdown of their revenue, and I just want to show this because really, again, I want to reiterate reiterate, this is about trading transaction fees, and it's really about the retail investor. So you're going to see at the bottom of this is the $590 million of revenue that they had in Q3. If we go to the top, transaction revenue, retail investors, that was $346 million of the $590 million. So that is the lion's share of their revenue. This is by far number one. And it's interesting, institutional investors were $19 million. Institutional investors represent a significantly larger portion of the amount of trading activity, but they pay very little fees. This company is about the retail investor. I am going to point out they're also starting to make a bunch of interest income. They made $101 million of interest income in this quarter versus the same quarter last year. They only made $8 million. They were involved in the revenue share in the interest income on USDC. So obviously their customer accounts have a significant amount of that. It's the base currency that they trade in. So now with interest rates higher, they are making some money here. So it's $100 million. That's not insignificant, but this is not where the future of their company lies, in my opinion. Also, their exposure on USDC is not dramatic. Total exposure of maybe $300 or $400 million. So again, that's not what I'm focusing on. I wanted to point it out because it was a big difference, but really up here, this transaction revenue is what this company is all about. So if I look at their income statement, here's that $590 million in revenue that we just saw a breakdown of, and then you're going to see operating expenses. They have some big ticket items here. Transaction expense, that's their direct cost. That was only $101 million. So they're making a very healthy profit transactionally. Where their problem is in overhead. One of the main costs in this quarter was stock-based compensation, which is non-cash. So a lot of their loss was paper loss. It had nothing to do with actual cash spent. Okay, so if I go to footnote 15, you'll see stock-based compensation expense. Total for the 3 months ended September 30th, $391 million. So $391 million of their $550 million loss was in stock-based compensation. So that's the vast majority of their loss. So, they lost about $150 million after that, which is pretty close to what their EBITDA was. So it's just important to keep that in mind when we look at these financial statements. It looks like operating loss was $556 million, but most of that, almost $400 million of that, was stock-based compensation. And you can see they have two lines, technology and development and general and administrative. So general administrative is just straight up their overhead. Technology and development effectively is their overhead. They invest a lot of money in salaries for people working on improving their programming and their technology. And this is where a bunch of the stock-based compensation came in. So this number was nowhere near this big in total. Most of this is actually stock-based compensation. Okay, I also want to show footnote number 8. This, I think, is critically important. So a lot of these other companies like FTX are private companies or they are non-US companies, and their books and records are somewhat of a black box. And that's where I think the heavy regulation is coming. Anybody who wants to conduct business in the United States, I believe, is going to have to comply with regulations that are similar to what Coinbase is already complying with. They're starting to self-report certain things, but these bits of information don't tell the whole picture. And footnote 8 here to me is the whole story, and we don't have this really from any other cryptocurrency exchange. Customer assets and liabilities. So you'll see this table right here. The following table presents customer cash and crypto position in thousands. So total customer assets, $101,704,000. On the liability side, you're going to see an associated liability of $101,470,000. So those are almost the identical number. And what that means is all of their customers' money is secure. The company safeguards crypto assets for customers in digital wallets and portions of cryptographic keys necessary to access crypto assets on the company's platform. The company safeguards these assets and/or keys and is obligated to safeguard them from loss, theft, or other misuse. So you can see this company right now, they don't have mystery loans, and there's not enough time. This video is already going very long, or I would dig into their balance sheet a little bit more. But these numbers are directly off of their balance sheet. So they've set aside in custody all of their customers' assets. So what's happening to FTX, what happened to Voyager, to a lesser extent, I think BlockFi right now has stopped giving withdrawals. These types of things, This is not going to happen with Coinbase because they have their assets set aside. They're not lending customers assets. They're not borrowing money against customers' assets. This is virtually a 1-to-1 ratio. In fact, they have more reserved than they do have liabilities to the customer. So to me, this is a critical difference. This is why I think as regulations come, this is the end result. All the rest of the cryptocurrency exchanges, I think, are going to have to end up doing something that looks like this footnote 8 right here, which is disclosed. It does no good for them to disclose we have this many Bitcoin, we have that many of this other token, and show, all of that out of context doesn't mean anything. What we needed to know is what's your obligation to your customers and what's your reserve against that, and prove it. And Coinbase is already proving that with quarterly 10Qs and annual 10Ks that are audited and sent to the SEC. So to me, this is the backbone of why I think Coinbase is going to survive. They have a gigantic head start on everybody else. Okay, I'm going to skip to their chart. This is Coinbase on the 1-week time frame. So you'll see this is really from the beginning of their trading. So they IPO'd here back in April of 2021. So you'll see from November of 2021 until November of 2022. So that is the last 1 year. This company's down 84%, their market cap. So they have been beaten badly and to some extent understandably so. And that is pretty consistent with the rest of the high growth stocks, also the rest of anything that has anything to do with cryptocurrency. But this is a gigantic pullback. So to a certain extent, if I was looking at this stock for me on a long-term basis, I would tend to think that this is probably a very low valuation for them right now. However, you're going to see there's massive volatility. I'm going to switch over to the 1 day. The ups and downs in this are brutal, and it could get worse before it gets better. And it's almost likely to get worse before it gets better. So as far as buying the stock, again, this is not financial advice, so please be ultra careful with Coinbase, especially in the short term. And you guys got to do your own due diligence and all that. So let's go to the 1 day time frame. Okay, so Coinbase on the 1 day time frame, I'm just going back to this basically here is May of 2022. You'll see they were up around $129. Then in August of 22, they were trading at around $116. Well, they're less than half that right now. They had a gigantic up day on Friday to get up to $57. So that leaves them still down almost exactly 50% off of their August highs, which was just 3 months ago. So I've circled this area right here. You can see that this time from October 27th until today, there was a massive downward push. Most of this had a lot to do with the FTX situation. Friday was a gigantic up day. They were up almost 13% on Friday. But again, that still leaves them down 50% from their August highs. So I do think there's a lot of upside left in this stock. But again, I do think it could get worse before it gets better. They are currently essentially just a few days ago at the peak of the FTX situation. They very closely retested their all-time low. But again, to me, I think you have to ask yourself, in conclusion, in my opinion, the big picture here is cryptocurrency going to survive? And if it survives, I do think that Coinbase is in the lead and they have a gigantic head start and advantage over all the other players. I didn't get to it, but they've made some agreements and some partnerships with companies like Google and BlackRock. So these are gigantic partners. These are going to lead to other sources of revenue and adoption over time. So I feel good about this stock. Again, not financial advice. You guys have to do your own thing, but actually this was a great one for you to pick. I had to do an extreme amount of research on this, and I feel like I understand the stock a lot better. Hopefully I was able to explain some of that to you guys in this video. So thanks again, and thanks again for being a member. So we'll see you in the next video.